When you look at an investment case, what do you look for in that company very clearly in terms of numbers? And what would you definitely avoid in terms of, if you saw these three things, you would definitely not invest in a company?
Yeah, I wish I could, open the screen and show you how exactly, if you give me a company's name, how we travel, like 8,
But
10.
just give us a big picture if you can.
So, the first thing is, let's figure out whether there is a franchise. See, I'm talking about a company which I have never heard. I mean, you will come and tell me XYZ company's name, and you'll tell them that they sell some product. And it's just flying, it's doing very well, and you have tested the product, it's very good. Now I say, okay, hold on, let's go to the screen. And first thing you figure out is what is the corporate performance. Okay, so is it making money or not? First thing. If it is making money, what is the return on equity? So return on equity, I don't like to see any company which is not having return on equity upwards of 20-25%. Okay, the moment it is 20-25%, I'm talking about most of the cases. If it is more than 20-25 cases, then is it increasing or is it stagnant? Okay, then immediately go and see what are the terms of trade. The moment it is making profit, the cash flow is dependent on, is it a company which is what are the terms of payment? Is it payment on cash? Is it payment in 10 days, 15 days? Because that tells me a lot about the strength of the product. Because I still have not gone to the field to figure out how strong is the product. But then terms of trade tell me if a company is prepaid. I mean, before even you get the product, you have to pay. You don't pay like that for many of the services and products. Only if it is very strong, monopolistic kind of thing. Or you get paid in less than 30 days. There are very few companies in consumer products which get paid in less than 30 days. If it is a volume growing rapidly and less than 30 days debtors level, that tells me a lot. So, and then immediately you go to the cash flow. Where is the operating cash flow? Where is the free cash flow? Once operating cash flow is there and growth is there, then I'm interested in hearing the full story. Okay. Then we try to figure out how is the length, how long this story can go on. It's a matter of judgment. Is it a 10-year story, 20-year story, or 30-year story?
How do you determine that? How do you determine that?
You see that is where the experience comes in. So if it is a consumer product company and it's monopolistic and worldwide it is, say, McDonald's. It's a franchise which is very successful all over the world. Okay. Now in India they are also successful. They are successful to get the consumer attention, but they are yet not successfully. They are not very financially successful, so to say. So if that company starts earning 20-25%, we know the longevity of this franchise is very, very long. And second is what kind of competition it is facing. So immediately after that, the longevity is dependent on how long the demand is going to be there. Say a parent company, the demand is going to be there for next 50, 100 years. The issue is whether this company's fortune can be impacted by many companies. If there are 20 companies jostling there and entry barrier is not there, then the story could be for 1 year, 2 year, 3 years. So that's how, if you see QGLP, quality growth, longevity at reasonable price. So growth is very integral part of our investing style. So now by only buying quality, which is fully priced, you cannot make money. So what needs is quality and growth and little bit of mispricing.
Mispricing.
So mispriced quality and growth is what is the way to go.